Hello and welcome to MasterChartsTrading.com market recap for the weekend in Friday, February 20th, 2015. This week we'll look at major indices as they hit all-time highs. QQQ, the Nasdaq 100 ETF, leads with help from Apple, and Apple hits all-time highs as well. Bonds, TLT, treasuries may be stabilizing after about a 9% drop, but the buying pressure is still quite weak. Gold is still falling. GDX, the gold miners ETF, had 2 inside days in a row, and I'll explain what I mean by that. We'll also quickly look at one bearish and one almost bullish gold stock. And we'll also quickly look at rebound in natural gas, which may have started already. Important information, all information on this video and on MasterChartsTrading.com is for educational and entertainment purposes only and shouldn't be construed as recommendation to buy, sell, or sell short any of the said securities. Alright, let's look at the S&P 500 large cap index. So this is a bullish chart, and within there were several buying opportunities. Latest buying opportunity happened on February 5th for us, and from then, let me see, the gain was about 2.5 to 3% gain there. So far, it's not terribly overbought on this indicator here. Like for example, here first it rolls over, and then we see a decline. So so S&P 500 is still on a buy signal and no sell signal yet. Let's look at QQQ, PowerShares ETF 100 Trust, Nasdaq 100 Trust. For it, the buy signal occurred even earlier on the 22nd of January, and the gain for it is a little higher, around 4.5%, because it's just a stronger index, stronger ETF. So no sell signal either yet. And QQQ is definitely getting help from Apple, which is the next chart. Apple. The buy signal there was on January 23rd. And there the gain in Apple was around 15%. So that's pretty sizable gain for a stock. It's definitely getting overbought, but by no means weak. All right, let's look at market breadth for S&P 500. For S&P 500, so we are at a new all-time highs for S&P 500, and many people are worried that this is going to, be the beginning of a bear market and it will collapse from here. It's entirely possible, but unlikely. And the reason for that is because usually within when a peak does occur, it is preceded by a divergence in a advanced decline line and advanced decline volume lines. In other words, the S&P 500 would make a higher high, but the advanced decline lines would not. So far, I don't see a divergence. I see confirmation. I see that S&P 500 making highs, and so does advanced decline line. And today, a Friday, all-time high, and the same goes for advanced decline volume, advanced decline line. So no divergence in the advanced decline lines. As far as breadth momentum, so the breadth momentum and breadth momentum volume oscillators, they're rising, and they're above their 10-day exponential moving average, and they have not yet rolled over. In other words, the breadth and the breadth momentum volume is also pushing higher. For example, here you could see that breadth momentum rolled over below its 10-day moving average, and then we had the decline. We're not even close, so we're still moving higher. As far as regular momentum oscillators, same thing. We are pushing higher, and we're not terribly overbought. You know, this was definitely a terribly overbought condition. So we're getting there. We're in a overbought territory, but you know, overbought does not mean weak. It just means that we are, you know, the prices are, you know, there is a lot of interest in buying stocks, and a lot of people are, you know, trying to get in on this market. All right, bonds. Bonds fell around 9% since, let me see, when was this? January 30th, when they hit all-time high here. And they are kind of in this retracement zone. So this is a Fibonacci retracement from the peak, and I drew it from the September 15th, September low here. It's really difficult to figure out from where to draw them, so I decided to draw it from here. And this is a kind of like a good area for a retracement after a significant move up. So you can see this candlestick, this red candlestick right there, and all of the following candlesticks are sort of within the range that you can see it a little better, that this first candlestick provided. So there was no close below it or close above it. So this is sort of like inside days, you know, in a row, at least one inside day in a row. But the other 2 days did not conclusively prove that the next move will be lower or next move will be higher. They kind of just stayed in this range here. And my feeling is that we may drop a little bit lower, because you can see that this is not yet oversold. Here it was oversold, and then eventually we rallied back up. Here we were not even oversold and we rallied back up. But here we're pretty strongly, um, you know, in the selling pressure is pretty strong. So potentially we may drop a little bit lower, but so far, you know, TLT is in a bull market, so this is still considered an opportunity within a bigger uptrend to buy, not to sell. And then the next chart right here, TLT, I'll show this. This will show more of a market timing kind of point of view. So we had quite a bit of buying opportunities, all 5 of them, and this chart resulted in a pretty sizable profit. Right now, we're definitely oversold on this chart. However, there is still not enough buying pressure. So you can see it has to roll back up, and this hasn't happened yet. So we need to see this indicator roll back up, and then this Arun indicator, the green one, surge to 100, and that for me would be a good buying opportunities. Not even close. So we need to see both this indicator, price momentum oscillator, and this indicator, the green Arun, surge to 100. Has not happened yet. All right, next on the agenda is gold, and this week gold lost around 2 or 3%, I forget, but you know, it's a little bit of a busy chart. I'll try to go through it one at a time, slowly. So gold ran into major resistance zone at around $1,300, and then just fell from there. This green line, the 200-day moving average, see how it sliced right through it. So that was a kind of like a bearish sign right there. And then the same thing happened here. A 50-day moving average sliced right through that as well. And now it came to this kind of like a moment of truth. So a couple of things converge in this area of $1,200 is, number one is this uptrend line that I drew from the bottoms in December and January. And it did close below it, below this trend line. But not very conclusively. I would like to see a bearish candlestick close around here somewhere to conclusively prove that this trend line is definitely broken. And then another thing is that this blue horizontal lines, those are Fibonacci retracement for gold, and here it retraced 62% of the move from November to January. So we're definitely at the point of if the gold drops from here, then it would not be a very good sign, because it can easily collapse to 1160, 1140, and maybe even make new lows. As far as our market timing indicators, we did have a short signal on February 5th, right there. And since gold and gold miners are pretty much interchangeable, very close to one another, at least the correlation is very high, we went ahead and opened a short position on February 6th in gold miners inverse ETF called DUST, DUST. Okay. Next chart, I'll show GDX market vectors gold miners ETF, one of the very widely traded ETFs. It has really large volumes of trading. So similar things here. It's a little bit stronger than gold itself. You can see that this red line, the 50-day moving average, it has not yet closed below it, whereas gold did close below it right there. So it's a little bit stronger than the underlying commodity. However, it did close below the 200-day moving average, and interestingly enough, the last 3 days, so this big white candlestick right there, and the next candlestick, the red one, is 100% within the range of previous candlesticks. So this is called an inside day, where the today's candlestick is entirely within the range of yesterday, of price range that happened yesterday. And today it was even tighter. In other words, today's trading range was within yesterday's trading range. So looks like we have 2 inside days in a row. So whichever way the range breaks, to the upside or to the downside, that would put a significant bias into the future of the price. My money obviously is on the downside because gold is in the long-term, gold and gold miners are in the long-term downtrend, and and also it's retracing the steps. So it's a similar thing. See that those horizontal lines right there, that's a Fibonacci retracement. So it's right now around 38% retracement. So it's pretty shallow correction for even a for any kind of bullish or bearish. It's pretty shallow correction. So I'm targeting at the very least a 50% retracement, but possibly lower to 61% retracement. However, if it fails a 61% retracement, we could see the new lows as well. As far as bullish case, actually let me refresh this, see if I got new readings. Yes, I did. Good. So as far as bullish case, the only bullish or not very bearish indicator on this chart is the bullish percent index. So here it's at 40%, and it's not that bad. 40% is kind of like a range for a bullish, like 40 to 60%, 40 or higher percent is, okay for a bullish reading. If it drops below 40 to the 30s, then definitely we'll know that something is not right with this. As far as the advanced decline percent, advanced decline volume percent, you can see it's below its exponential moving average, and there were no new highs for the few days, but notably there were also no new lows, so it's kind of like trading. As far as this indicator, it's sort of neutral. That's why I labeled it as pink, not red. All right, and a couple of stocks, individual stocks. So Goldcorp, huge drop on the heels of Thursday's report that they lost $2.4 billion. This is a very large, it's 14% of GDX is Goldcorp. So definitely weighing on GDX itself. And this is clearly a bearish stock. So a short signal was generated on the 19th here, if you're playing it. And then opposite end of it is Newmont Mining, and this is a completely different picture. It's first of all, a counter trend buy signal happened on January 16th. I don't personally like to play counter trend, but if you did, then you would have gained around 29 to even 30%, a little bit over 30% by this particular iteration. And today, on Friday, they reported an actual profit, and for gold miners, that's significant. So completely different picture. And I'm almost ready to call it long-term bullish, but I'll show you where on the next chart. What I mean is, I want to see this blue line cross above this red, this dotted green line, and then I would call it long-term bullish, and then possibly hang around for a few days here as well. Hasn't happened yet. So as of right now, Newmont Mining is still bearish, long-term bearish in my book, but it can become bullish if it just pushes a little higher, and then that may not be such a bad place to buy and for a new bull market in Newmont Mining. And then finally, let's look at natural gas, and I highlighted natural gas last week as well with this divergence. So this is a bullish divergence where price of the security makes a lower low while the indicator makes a higher low. And as I said before, divergences in momentum indicators are quite common, and they don't always work out, especially if the trend is very strong. So if the downtrend is strong, bullish divergence doesn't mean much. But this is a very oversold security. In fact, it hasn't been this oversold since 2012. So this divergence could potentially be valid. And on Thursday, there were a report of natural gas inventories. And on Thursday, the price of natural gas did not drop. So that's important, because if there was a glut of gas, usually the price would fall. But this time it did not happen. So that was a first sign for me. And then today, on Friday, it rallied over 5%. So this looks promising. It closed above this possible triangle right there. However, we have not yet have a signal generated, a buy signal generated in natural gas. So per our trading system, I want to see this green Arun make it kind of like to the right a little bit, move to the right a little bit. It hasn't happened yet. So just a little bit more price to the upside, and I'll be ready to say that this is indeed a valid counter trend bounce. All right, wanted to show how to find us on the internet. So please go to MasterChartsTrading.com, and on the blog we have all of this information I posted there, and including this video as well. We also have a separate video section, and this video will be posted there as well shortly. Public charts page contains all of the links to this link right there, public charts page, contains the link to the charts that you saw today in the video. And if you have any of the Twitter, Facebook, YouTube, or StockTwits accounts, you can follow us there as well. Also, please sign up for our mailing list, as we're hoping to start a trading alert service sometime this year. And you will be the first to receive a good offer price. All right, thank you for watching and have another great trading week. Goodbye.